Good morning, investors. You are now on KleverStock with me, Ainun serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Bursa Malaysia opened slightly lower today due to mild profit taking in selected heavyweights after recent gains amid weaker sentiments on the global economic outlook. At 9:10 a.m., the FPM KLCI slipped 1.16 points to 1,589.08 from yesterday's close of 1,590.24. The benchmark index opened 2.21 points lower at 1,588.03. Market breadth was negative, with decliners leading advancers 166 to 145, while 264 counters were unchanged, 2,019 untraded and 16 suspended. Turnover stood at 123.43 million shares worth 75.37 million ringgit. In a note, Malacca Securities Sinjan Berhad expects the FPM KLCI to trade in lackluster tone today, tracking Wall Street's weaker overnight performance. It said, however, buying interest might emerge in domestic-driven consumer-related counters such as 99 Speedmart and Mr. DIY, which are expected to benefit from government cash aid and handouts. The brokerage firm said the Wall Street closed mostly lower as investors shifted out of significantly overstretched large-cap tech stocks and moved into small caps and value stocks ahead of Jackson Hole meeting this Friday. It said traders' focus this week will be on Jerome Powell's speech at the Jackson Hole Symposium, where the market is speculating the United States Federal Reserve to adopt a more dovish tone and potential rate cut in September, with the probability currently at 86.1%. Among heavyweights, Maybank was 3 cents higher at 9 ringgit and 83 cents, and IHH Healthcare added 2 cents to 6 ringgit and 87 cents, while Public Bank slipped 1 cent to 4 ringgit and 45 cents, and both Tenaga Nasional and CIMB fell 2 cents each to 13 ringgit and 70 cents and 7 ringgit and 37 cents respectively. On the actively traded list, Ventress Energy eased half a cent to 3.5 cents. PESTECH and Magma trimmed 1 cent each to 11.5 cents and 37 cents respectively, while Tango was flat at 73 cents. On the broader market, the FPM Almas Index shed 9.48 points to 11,802.93. The FPMT 100 Index declined 9.93 points to 11,587.72, and the FPM Almas Sharia Index gave up 13.14 points to 11,718.26, and the FPM Mid 70 Index went down 20.95 points to 16,689.02, while the FPM ACE Index earned 0.05 of a point to 4,709.74. Now, by sector, the Financial Services Index reduced 11.09 points to 18,174.41. The Plantation Index improved 3.59 points to 7,550.07. The Energy Index edged down 0.44 of a point to 749.78, and the Industrial Products and Services Index eased 0.12 of a point to 159. We should now look at the performance of our local currency. The ringgit opened flat against the US dollar on Wednesday amid cautious market sentiments ahead of the United States US Federal Reserve Chair Jerome Powell's Jackson Hole speech this Friday. At 8 a.m., the local note stood at 4.2215 or 4.2420 from yesterday's close of 4.2215 or 4.2255. Now, Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said the US dollar index fluctuated from a low of 97.95 to a high of 98.28 points, with traders adopting a cautious stance ahead of Powell's speech. He said market participants are searching for clues on the Fed's stance on monetary policy and how it will shape their decision in the upcoming Federal Open Market Committee meeting on September 16 to September 17. Markets are pricing higher odds for a 25 basis points cut. As such, the 2 and 10-year U.S. Treasury yield slid by 2 BPS and 4 BPS to close at 3.75% and 4.30% respectively. The Jackson Hole Economic Policy Symposium will be held on August 21st to August 23rd with the theme of Labor Markets in Transition, Demographics, Productivity and Macroeconomic Policy. Yesterday, the ringgit closed at 4 ringgit and 22 cents, easing 0.04% versus the greenback. As such, Muhammad Afzal expects the ringgit to maintain its trajectory between 4 ringgit 22 cents and 4 ringgit 23 cents today. The ringgit opened higher against a basket of major currencies, with the exception of Japanese yen, where it eased to 2.8578 or 2.8718. It gained against the British pound to 5.6923 or 5.7199, rose vis-a-vis the euro to 4.9147 or 4.9385. At the same time, the local note traded mixed against other ASEAN currencies. It gained versus the Singapore dollar to 3.2844 or 3.3007 and strengthened against the Thai baht to 12.9498 or 13.0195. The ringgit was flat vis-a-vis the Philippines peso at 7.39 or 7.43, as well as against the Indonesian rupiah, where it stood at 259.8 or 261.2. Now moving on to economic updates. Malaysia's trade prospects for 2025 remain supported by robust exports after bouncing back to growth in July with the highest monthly value ever. According to economists, they warn that the outlook for the next year will likely be riddled with headwinds as the full impact of the 19% tariff imposed by the US sets in. Malaysia's trade hit a record high of 265.92 billion ringgit in July, up 3.8% from 234.85 billion ringgit a year earlier, supported by stronger exports that reached their highest level in nearly 3 years. The Investment, Trade and Industry Ministry said exports rose 6.8% to 140.45 billion ringgit, the strongest monthly performance since September 2022, reflecting sustained global demand for Malaysian goods. It said imports edged up by 0.6% to 125.47 billion ringgit, while trade surplus continued for the 63rd consecutive month, valued at 14.98 billion ringgit for July 2025. Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzal Abdul Rashid said exports to the United States have been commendable, growing more than 20% in the first 7 months of this year. This goes to show that front-loading activities among the US importers have been growing at a healthy clip, and such trends are quite similar to the regional economies. He said in some sense, this should alleviate concern on the overall growth performance for 2025. Therefore, 2026 would be much more critical as the impact of the full 19% tariff rate will be felt more visibly. Meanwhile, economist Dr. Jeffrey Williams said the export and total trade figures are part of a continuing improvement in overall trade. The next trade figures are the indicator to watch. He noted that the current account surplus sank to just 3 billion ringgit, 0.3 billion ringgit or 0.1% of gross domestic product GDP in the second quarter of 2025. In June 2025, Malaysia had a trade surplus of 8.6 billion ringgit, which was an increase from the 0.8 billion ringgit surplus in May. He said, so the July figure is more positive, which is almost double the month before. Nonetheless, the trade surplus is very volatile and has been on a general downward trend since August 2023. Williams expects the continued global headwinds which will affect net trade volatility in the coming months and will reduce the contribution of net trade to GDP growth. He said already, Investment, Trade and Industry Minister Tengku Datuk Sri Zafrul Abdul Aziz said this week that the US tariff issue will cut 0.6 to 1.2% of GDP. So on average, this is a loss of 20 billion ringgit. Elaborating on the trade performance, the ministry said exports on electrical and electronic A&E products jumped by nearly 12 billion ringgit to 63.31 billion ringgit, a 22.5% year-on-year increase. For the January-July 2025 period, total trade rose 4.7% year-on-year to 1.73 trillion, with 1.731 trillion ringgit with exports expanding 4.3% to 900.47 billion ringgit and imports increasing 5.1% to 830.16 billion ringgit. This resulted in trade surplus of 70.32 billion ringgit, the highest cumulative value to date. The ministry said Malaysia's trade performance in the first 7 months of 2025 reflected a cautiously improving global trade outlook. The US decision to cut reciprocal tariffs on Malaysian exports to 19% from 25% underscored the country's disciplined trade diplomacy. This tariff rate, which is roughly in line with the rest of our peers in ASEAN, will continue to support our competitiveness. Despite global trade and US tariff headwinds, Malaysia's steady trade performance has contributed to the expansion of the nation's gross domestic product by 4.4% in the second quarter of 2025. And now moving on to corporate news updates. HSS Engineers Berhad's net profit jumped 6.6 million ringgit in the second quarter ended June 30, 2025 from 2.8 million ringgit a year earlier. Its revenue rose 31.6% to 57.7 million ringgit from 43.8 million ringgit, driven mainly by an 82% increase in engineering design revenue to 17.9 million ringgit. The growth was supported by newly secured projects including the Tuna Tekra container terminal development in India and the Sungai Klang flood mitigation project. Meanwhile, HSS Engineers Construction Supervision revenue slipped 4.5% to 12.4 million ringgit from the same quarter last year. Its project management revenue grew 26.5% in the first quarter and 16% for the first half of 2025, supported by consultancy and supervision work for the Baghdad Metro project and the KTP data center in Johor Bahru. No dividend paid for the current quarter. HSS Engineers expects the construction sector to gain renewed momentum in the second half of 2025, underpinned by a strong industrial projects as well as steady demand for data centers. It said the upcoming 13 Malaysia plan, which allocates around 80 billion ringgit in annual development spending, underscores the government's commitment to infrastructure development, socio-economic progress and domestic growth. He added a key catalyst is the approval of the Mass Rapid Transit MRT3 project in July 2025 by the Transport Ministry. HSS Engineers said feasibility studies are underway in Sarawak for two major projects, a new international airport and a deep-sea port in Kuching, which could attract up to 100 billion ringgit in investments over the next 5 to 10 years. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Hong Leong Bank Berhad has clinched 3 categories at the Asian Banking and Finance Retail Banking Awards 2025, marking milestones in its first-year transformation program. MAXIM Group Berhad has been appointed by Majlis Perbandaran Kajang as the lead developer to construct a new 52.5 million ringgit flyover at the intersection of Jalan Tasik Kesuma and Jalan Semenyi Bandar Tasik Kesuma. Sunray Construction Group Berhad has clarified that it is not under investigation by the Malaysian Anti-Corruption Commission, which confirmed that its probe is limited to the personal conduct of a former employee. MAXIM Global Berhad's wholly owned subsidiary Mizumi Maxim Senior Berhad has executed an agreement for loan facilities totaling 126 million ringgit granted by Alliance Bank Malaysia Berhad. And last but not least, AEON Co M Berhad and AEON Credit Service M Berhad have formed a JV to develop a unified membership and data ecosystem to enhance consumer engagement and group retail financial integration. Now that's a wrap for Morning Bell Updates with me, Anjara on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.